Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday the 6th of February. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Amazon joins big tech's tidal wave of cash, hoping to deliver AI returns in a winner-takes-most market.
The UK Prime Minister Keir Starmer apologises to Epstein's victims as he seeks to turn the page on the crisis engulfing his government over Peter Mandelson.
Plus, Italy's richest family, Ferrero, wants to conquer American breakfast tables, and they're planning to use this weekend's Super Bowl to do it.
Let's start with a roundup of our top stories.
$650 billion. That's how much four of the biggest US technology companies are planning to spend on capital expenditure this year. Bloomberg has calculated that the spending planned by Alphabet, Meta, Microsoft and Amazon would set a high watermark for capital spending by any single corporation in any one of the past 10 years. Shares in Amazon dropped after the company yesterday announced its latest results and plans to spend $200 billion this year on data centres, chips and other equipment. CEO Andy Jassy said the money will predominantly go to the company's cloud unit, and most of that spending would be for AI workloads. Speaking on the earnings call, he said it would be worth it.
When I look at this, what's happening, it's kind of unbelievable if you look at the demand of what you're seeing already with AI. But the lion's share of that demand is still yet to come in the middle of that barbell, and that will come over time.
Amazon shares fell 11% in after-hours trading after Andy Jassy spoke, with the spending set to weigh on profits. Operating income at Amazon in the current quarter is now forecast to be below expectations at between $16.5 and $21.5 billion.
Well, the latest plans for more capital spending from US big tech came as the Nasdaq 100 extended its deepest slide since April. Software stocks extended their tumble after artificial intelligence startup Anthropic rolled out a new model that's designed to carry out financial research. It's the second time this week that the company has jolted markets, underscoring the competitive threat from the new technology.
Bitcoin hit a fresh low this morning of just above $60,000 before recovering. At one point, the benchmark cryptocurrency was worth less than half its value at its October peak. Yesterday, Bitcoin fell by more than 13%, and its largest single-day drop since Sam Bankman-Fried's FTX collapsed in 2022. Cryptocurrencies have been on shaky ground ever since. A brutal series of liquidations last year sapped market confidence. The selling has picked up steam this week as leveraged bets have been unwound and broader market turbulence has hit crypto.
In political news, UK Prime Minister Keir Starmer has apologised for appointing Peter Mandelson to a senior role despite his links to disgraced financier Jeffrey Epstein. Speaking during an event in England yesterday, the Prime Minister directly addressed Epstein's victims.
I am sorry. Sorry for what was done to you. Sorry that so many people with power failed you. Sorry for having believed Mandelson's lies and appointed him. And sorry that even now you're forced to watch this story unfold in public once again.
Keir Starmer speaking there. His apology follows a concession on Wednesday that material used to vet Mandelson for the role of UK ambassador to the United States did contain details of his links to Epstein. After the revelation, some Labour MPs helped force the government to agree to release sensitive documents about the appointment to the Cross-Party Intelligence and Security Committee for review. A YouGov poll released hours after Starmer's latest remarks showed 50% of the British public believe the Prime Minister should resign.
To some earnings news now. The French bank Société Générale has announced a new share buyback of almost €1.5 billion after its fourth quarter profits beat estimates. Net income came in at €1.42 billion, €200 million higher than expected. SocGen's performance was helped by lower than expected cost and strength in its French retail bank. The lender's equity and fixed income traders had a weaker quarter, both missing estimates.
The Bank of England's governor says that a 50-50 bet on an interest rate cut next month is not a bad place to be. Andrew Bailey was speaking after the central bank's unexpectedly tight 5-4 vote to hold interest rates yesterday. Speaking to Bloomberg about the decision, Bailey said that he is still looking for a clearer picture of the economy.
We think inflation is now going to come down to target sooner than we thought it would. I think this spring sometime. But the real question now is it going to sustain? Is it going to be sustained there? Because that's our job. And that's all to do with underlying inflation. And that's where I certainly think that we do need, we need some more evidence base to mount that.
Bank of England Governor Andrew Bailey was once again the swing voter in choosing to hold interest rates at 3.75%, having voted to cut at the last meeting in December. Yesterday, 4 members of the Monetary Policy Committee voted to cut rates, which was more than the 2 that economists were expecting.
In Frankfurt, the European Central Bank voted to keep interest rates unchanged at 2%, as predicted by all economists in Bloomberg's survey. Following the decision, ECB President Christine Lagarde downplayed the recent rally in the euro, again describing inflation as being in a good place.
A stronger euro could bring inflation down beyond current expectations. More volatile and risk-averse financial markets could weigh on demand and thereby also lower inflation.
Speaking during a press conference, Lagarde also told reporters that Europe needs time to see AI-related productivity gains. Questioned on the impact of spending on artificial intelligence in the region, she observed that it's happening as part of a wider shift towards domestic momentum.
Iran's foreign minister has confirmed that nuclear talks with the United States are scheduled to be held in Oman today. Bloomberg's Ewan Potts has more.
Today's talks in Muscat mark the first public meeting between Iranian and US officials since Tehran's violent suppression of mass protests in the country last month. The summit comes as President Trump calls for another nuclear agreement, a new deal between the US and Russia. This after the new strategic arms reduction treaty known as New START, signed in 2010, expired yesterday. Trump says the existing treaty was a badly negotiated deal which was being, in his words, grossly violated. Russia has warned the expiry of New START means the two sides are now, quote, free to choose their next steps. In London, I'm Ewan Potts, Bloomberg Radio.
And those are some of our top stories for you today. Looking at markets, so the S&P 500 closed down 1.2% yesterday. The Nasdaq fell by 1.4%. So the Nasdaq has now suffered the worst 3-day rout since the April meltdown. Amazon's shares tumbling 11% in extended trading. This morning, the Kospi is also lower, down 1.5% this morning. The Hang Seng Index is down. But elsewhere, you're seeing some signs of stabilization. Maybe MSCI Asia Pacific Index is certainly flat. And stock futures for Europe are higher. US Stocks 50 futures up by just about 1/10%. You've got 10-year US yields at trading at 4.19. Bitcoin did plunge. It's rebounded somewhat. It's trading above $65,000 this morning, and gold is flat. So that's a look at the markets right now.
In a moment, the AI spending race keeps heating up. We'll dig into the latest announcements. Plus, Italy's Ferrero family makes a bid for America's breakfast table. But another story that we've been reading this morning: what would you expect from a holiday experience that costs $29,000 a night? I think I'd want someone to carry me from home, essentially, and bring me the entire way. It's just sort of like a long
pampering
chaise
you the whole
grapes.
time. Yes.
This is a story about the ultra-luxury hotel brand Aman that's testing out a new cruise. The Amangati will set sail next year. It'll have 94 guests on a $700 million super yacht. It has 2 helipads and IV treatments in the spa. Now, included in this is breakfast in your suite.
Right.
You have concierge service that can get you tickets to high-profile events. But it doesn't include any wine or the cost of eating in any of the ship's restaurants. 3 of the 4 ship restaurants as well.
Oh, that will come as a shock to many. I mean, that's £21,000 for anyone who operates in sterling. Yes, I'd expect a lot of pampering too. I think it's a really interesting story, and it's an interesting bet, isn't it, by the Aman Group? I mean, it's not the only brand that's testing ultra high-end experiential holidays. I mean, Orient Express is doing the same thing. So it's like trains, hotels, now boats. Will that work?
Will that work is the key question. That's what our colleague Fran Golden's been writing about for Bloomberg Pursuits. And she says even big fans of this brand, there don't seem to be huge translating into bookings for this new cruise. Now, the company says sales are exceptional, but it's speaking to the travel consultants that Fran has, doesn't seem to be a huge uptake so far. So one to watch. We'll put a link to the story in our podcast show notes. Let's bring you more now on the latest massive spending announcement on AI, this time from Amazon. That's after a week where fears over AI disruption have caused major turmoil on markets. We've got our tech editor, Vlad Savov, with us for more. Vlad, good to talk to you. So Amazon adding $200 billion to spending this year. That comes after the string of announcements. How significant is what we heard from Amazon, first of all, and how did it go down with investors?
I mean, it is completely unprecedented. It's CapEx on a scale that needs historic precedents. Some of our colleagues in the US tried to put this in some sort of reasonable context, and they went back to the railroad age, that level of investment, that level of infrastructure development. And honestly, it's a sort of spending that is in line with those $29,000 a night holidays. There is nothing like it that was previously seen. Understandably, the market finally found the level at which it's spooked by the excess spending. Amazon in extended trading dropped. Before it, Google announced $185 billion of its own CapEx spending plan for the coming year. Cumulatively, together with Microsoft and Meta, we're looking at more than $600 billion to be spent over the coming year, which is excellent news for NVIDIA because they will get the bulk of those orders. You're talking about NVIDIA AI chips. But it's also worth mentioning there is some nuance here because Google, for its own sake, it develops its own TPUs, tensor processing units, which are competitors to NVIDIA. So some of that spending for Google in particular is going to go toward its own chip making as well.
Yeah, it's fascinating. I mean, the $200 billion, it's hard to get your mind around, but it's certainly well above the entire annual budget for education in Britain. So that kind of gives you an idea of just the start. It also comes after similar huge spending announcements from Alphabet, Meta and Microsoft. So how should we see the size of these announcements as a whole?
Well, it's very interesting because if Amazon had been the first to come out with that $200 billion figure, it may be the case that Google and Microsoft might not have taken a dive quite as much as they did. Each of those figures, because of its particular timing, was a shock, and they were succeeded by a larger figure. The competitive relationship between these companies is the thing that most people are still looking out for and watching for, because the thesis is still that it's a winner take all or winner takes most is how one analyst put it when it comes to AI. So Microsoft's executives, Meta's Mark Zuckerberg, they've spoken already about this idea that the risk is you might invest too little rather than too much. And to date, at least, again, the investor community, Wall Street, seem to now be a little bit spooked by the level of investment. But to date, the belief has been along the lines of venture capital. It's you can't spend too much. You have to get the biggest slice of what seemed to be a multi-trillion-dollar pie to come.
Okay, this is all happening at a time when we've been rocked this week by what the potential for AI disruption could do to different sectors of the economy. We've had another announcement for Anthropic of a new AI tool, this time for financial research. Talk to us about the reaction that we've seen to this. Is it similar to the legal tool that was announced that caused the sell-off earlier this week?
Not at all. This has been much more tempered. I would say in both cases, we've had so little time to do any testing at all. And even in the first one, most analysts agree that the reaction was too strong. It was effectively people were looking for some sort of trigger event to get them to sell off software stocks because they were seen as endangered by AI and the influx of AI. And it's worth bearing in mind, these are things that deal with compliance, legal matters, and so on. And the idea that those would be replaced overnight or anywhere, even over the course of the next few years, seems highly unlikely. Anthropic, is worth bearing in mind, it still uses Workday for its hiring platform. It still uses a lot of enterprise software because those things have been tested and shown to work at scale. They've been shown to be legally compliant. And when that's your job is on the line, you're not going to overnight swap those out for something that you haven't tested over the course of months and even years.
Yes, interesting. Vlad, thank you so much for being with us, our tech editor, Vlad Savov, always with interesting thoughts. And Vlad and our global team covering technology have a lot more for you. You can sign up for our daily Tech In-Depth newsletter. Go to Bloomberg.com newsletters. We'll also put a link to that in our show notes for more. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, the Italian billionaire behind the Ferrero empire is making a major push into American breakfast tables, and he's using the Super Bowl to do it. Giovanni Ferrero's family group owns products like Nutella, Kinder and, of course, Ferrero Rocher, but they've also acquired some of America's best-known food brands, including Kellogg's. Our own reporter, Flavia Rotondi, joins us now for more. Flavia, good morning. What is driving Ferrero's expansion in the US right now?
Well, good morning all. I would say that the expansion in the States by Nutella's maker Ferrero started years ago with Giovanni Ferrero, the heir, let's say, of the Ferrero empire, but had definitely an important push in the last few months after the acquisition of the Kellogg's cereals. The idea is just to really try to enter that particular segment, as you say, the breakfast segment in the US, which Ferrero thinks has a lot of potential for them. Just think that, in the States, cereals are present in like the 90% of the American households. So thanks to Kellogg's, they can really try to expand even further and to probably offer some of the products, some of the more premium, let's say, Ferrero products that are really popular in Europe, in Italy in particular, but not definitely that present yet in the US. We had exclusive interview with the chief financial officer of Ferrero, Daniel Martinez Carretero. He says that, yes, cereal has a penetration of more than 90% in U.S. households. Can you imagine? Those were his own words, how important it is for a consumer goods company to be present in that moment. And Kellogg's, he said, give us the door, an important door to enter that market.
Yeah, that's interesting. And of course, there's a US twist to some of the products that are being offered. They are launching Nutella peanuts. Why? Why now?
Correct. Well, they have been trying, they told us they've been trying to find the right formula for years. They are super specific about trying to get the right formula, the right taste. So something that is basically tastes like the original Nutella, the one, that has a dominance of hazelnuts, but with the peanuts, in order to please the American consumers, trying to appeal to the American taste. And they say they finally find they're happy with this formula, so they're launching it in April. Apparently, they already have some good feedback from retailers, from the people who tested it, and as Thomas Chatenier, the global president of Nutella, told us in a separate interview, the goal is to create a product that becomes a staple in North American household, something that you can expect to see on every kitchen shelf across the region. So something that is basically already tradition in Europe that might become a tradition in North America as well.
Flavia, have you tried it? Do you think it could work in Europe?
I think in Europe they will still prefer the original one. I mean, the taste is very similar, to be honest, but I think that at the moment the idea is just to use it for U.S. consumer, and I think it makes sense. Try to, at the moment, keeping the original one in let's say, the other markets, the more mature and traditional markets for Ferrero.
Talk to us about, though, the Super Bowl ads. This is a really important part of this strategy of pushing into the US. We've watched the Kinder Bueno one, by the way, which I actually quite enjoyed, but they're going to be advertising both Kellogg's and Kinder Bueno during the Super Bowl. Why?
Correct. But this is actually, think about it, the fact that, Kellogg's has been not present in a Super Bowl Super Bowl commercial since 2019. So they are back, and now they are back under the name of Ferrero. So they're presenting that. They're presenting a Kinder Bueno, as you said. This is a very popular product and bar in Europe, but definitely not well known in US. For them will be a great push, of course, to be present. And choosing Raisin Brain for a Super Bowl is also a sign of the company, I would say, response to consumers' evolving health concern. There will be the Star Trek actor William Shatner, who is 94, presenting Raisin Brain, and just endorsing the message of try to get Americans fiber to fill the Americans fiber gap. Basically, just trying to eat more in a healthy way.
The Trump administration does have this idea, this push to make America healthy again. So I suppose, how is Ferrero adapting to that, to the pressure around ingredients and also sort of nutrition?
Of course. I think the main thing that came from the conversation that I had with a CFO was that, of course, they're aware of this. Of course, they will try to respond to all the guidelines coming from the US. But basically, in Europe, what they always done was to try to, for example, to present a lot of snacks. Think about Ferrero Rocher. Think about other snacks. They are individually wrapped portions, so with a kind of limited calories intake. This is their idea of saying, listen, of course, you have to eat healthy in a healthy way, but if you want to treat, try to be responsible when you're eating and try to, just to have a little intake of calories and be happy with that.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.